Hey, it's Joshua here with Mortgage Clarity, and today I have a special guest with me, Andrea Fay. Andrea is a real estate agent and principal broker of Home Smart Realty here in Corvallis. She's been an agent for over 10 years. I think I've known you all 10 years of that, and so I'm really excited to have you here today. I just kind of wanted to bring somebody in who has maybe a different perspective than I have from the lending side, just to talk about the real estate market, what we're hearing in the news and stuff like that. So first, just want to say thank you.
Yeah, thanks for having me. It's fun to be here.
Absolutely. Okay, so let's just dig into it. I think the big question people have is, this is 2022, middle of October. Interest rates this year have gone from the low threes to now the high sevens. There's some fear out there. And there's a lot of talk about the housing market maybe being negative, that maybe values about to drop, maybe there's going to be a bubble. What do you think, given the current situation here, what's happened here in Benton County? This is where your expertise is, Benton County of Oregon. What's your thoughts? What's your takes on the market?
Yeah, so you know what I think we're seeing in the Benton County area and also Linn County, we're seeing a pumping of the brakes on both sellers and buyers. And so we're kind of seeing a little bit of a slowdown, and not, let me be clear, and not a slowdown in the sense that prices are dropping. It's more of a, people are really taking their time, and the people that are buying and selling, those are people that really need to do that right now. Okay. So they have good reasons for it, like they had a job change, or there was a death in the family, or their family's growing and they've outgrown their house, things like that. Those people really need to make the change. But so we're seeing that as far as prices go, that's one of the number one questions I get is, are prices dropping? Because the news media makes it sound like doomsday out here.
Yes.
It is. Let me reassure you, it is not doomsday, and it's actually a pretty good market for buyers. Even though the rates are a little bit higher, it's a really great time to buy, based on the fact that you have lower competition, not as many buyers out there right now. So
both buyers and sellers are kind of leaving the market. Are these buyers and sellers, are they gone forever?
No, I don't think so. My prediction is, we have a slowdown right now, but I think it's because of sticker shock. They're looking at that interest rate and they're going, oh. Yeah. They've been used to paying, for 3 and 4%, yep, in the last couple of years, and those were really great deals on lending. Money was cheap, but now we're in a place where it's like, oh my goodness. But I bought my first house in 2003, and it was about a 6%.
Okay.
Interest rate.
Yeah, I was almost 7, just broke below 7, 6.875 when I bought my first house. Yeah.
And at that time, I don't know about you, we were just jumping up and down. We were like, woohoo, we got the best rate.
Yep. I wasn't a lender at the time, and so a friend of mine, he's still a friend. Yeah, he was like, dude, you got a great. We're under 7. I'm like, oh, sweet, So I was excited for that.
Yeah. So and we were excited about that too. And then of course, I think people got comfortable with these really, really low rates, and I think it's probably time to have the hard talk and say that maybe those 3% rates won't be around forever. So, right. Sorry.
I know. I think I for one, being lending, didn't think they were going to stay around as long as they did. It was incredible to see rates where they were for as long as they were. Before COVID hit, we were in the 6s on rates there. I believe, if I'm correct, I think we were like low 6s, maybe high 5s. And so we've kind of came back to that, and then the last 2 months we've passed that. But yeah, the thing about, again, affordability, we talked about this a little bit earlier. When you look at affordability, there's a few things you have to look at. It's not just what the rates are today. It's not, when the rates were low at 3%, the news was just screaming the houses weren't affordable because the prices went up too much. But they were ignoring the fact that rates got cut in half, which means even though you had a higher price, you still did pretty good. Now, granted, today with the prices we've got and the rates we have, it's not as affordable as it was 6 months ago, but does that mean it's not affordable? I don't think so. I actually crunched the numbers on this and went back to 2006 and just kind of took the average price of a home, and then I figured out what has home values appreciated since 2006. How has income, because income is a big component, right? Affordability is about how much you make compared to what you spend. And values of homes went up like 58% since 2006, but income went up 63%. So if you go back, and I started with a $300,000 priced home, and just did kind of the average first-time home income, like $5,000 a month at that time. Owning a home in 2006 was about 30% of your income. And that's kind of the definition of affordability, really. I mean, it's kind of vague. I mean, a person who makes a lot more money versus less, 30% doesn't feel the same. But that's kind of the general term. Well, if you take the same house, apply it, appreciation, give it today's rates, and then appreciate the income along with it, because income is kind of what's causing some of this inflation, it's still almost 30%. It's almost the same.
It's really interesting because, you mentioned 2006, so that was, right when we were dealing with our market crash, and that's one of the number one questions I get is, oh my goodness, like, the market is changing, that is the housing going to crash again? And I don't think that's even in the cards. Not even close, because the market back in 2006, 2008, when it did crash, was completely opposite.
Okay, how so?
Well, there were a lot more homes on the market. We were way overbuilt back then. And I actually, that was before my real estate days, but I did work in title and escrow. So I got to see all kinds of crazy, almost creative looking lending and kind of shady stuff that went down, but we couldn't do anything about it, except for just watch it happen. And so there were some bad loans that were being written back then, and now the lending restrictions and guidelines are so much better and so much better for consumers. So we're just not really seeing that. And then bad lending coupled with lots and lots of housing is completely opposite to what we have now.
Right.
So we've got good lending and a housing shortage, like a major shortage. So, and I think we're going to continue to see that housing shortage. But I think now it's an incredible time to buy, and we're seeing a lot of investor buyers going, yeah, this is a great time to buy. So
right. Well, they always say when there's fear in the street or blood in the street, it's a good time to buy in the stock market and stuff like that. And I think that's kind of where we're out here is because rates have jumped so much, there's a lot of fear. We've removed a lot of buyers, and we were talking about this earlier. Those buyers didn't disappear. They're still here. Just like we saw in 2020 when COVID came out, we saw everybody back away. We saw things drop. The very next year, even though COVID was still around, the people just, this is normal. This is what it is, so let's get back on with life. And all that demand came back, and you got 2021, which is phenomenal if you own property. It was really difficult if you're trying to buy. So I think it's the same situation. You have an opportunity now where for the first time you can actually negotiate a fair deal with a seller where you couldn't really do so much before.
Right.
But once rates start to come back down, or even if they just stay here, like for a year, and people just realize, oh, this is just what it is, those people, they still don't want to stay home with mom and dad if it's the younger generation. They still want to buy. And even with current interest rates, current values, when you compare the benefits of owning to renting, owning still, without a doubt, I mean, it's hand down beats renting. So
oh, big time. And then you've got an appreciating asset too, which, if you're renting, you're paying somebody else's mortgage. And whereas if you're owning, you're paying your own mortgage. And I don't know, I saw a graph a long time ago. It was, if you bought a house in 1995, how much it would have appreciated. And it was over 400%.
Yeah.
It's incredible. And for some people, owning a home is one of the biggest assets they'll ever have, and one of the best investments they'll ever have. So
yeah.
I think it's still, with any kind of investment, starting is usually key.
That's right. Exactly. Yeah, that's true. The earlier you start, the better.
Yes.
Absolutely. Yeah.
Time is on your side, really, and it's the same thing with a house. So, if you delay because you think the rate is too high or whatever, who's to say? There's some talk of rates going up in the future even more. So, I would say, catch it before it goes up.
Yeah, and if rates come down, you get to refinance there. Because I think you and I both have clients that in 2021 just could not get comfortable with the fact that they had to offer out over asking price. To them, that was an offense. I mean, I'm offering what they want. Why would I have to offer more? And so they figured, I'm just going to sit on the sidelines. I'm going to wait for the market to cool. Yes. Well, now the market on the competitiveness is cool, but on the flip side, now rates have gone up. And anybody who would have gone in a year ago strong on their offer with those rates would be in a much better position today. But not being in as good of a position as a year ago doesn't mean you're necessarily in a bad position, because it's not about where housing is now, it's about where it's going. And we talked
true.
about inventory, and I think you already mentioned that inventory is probably going to be tighter going in the future.
I think it will be, just because everyone's pumping the brakes, especially home builders are also, and I think because it's a little bit of a risk for a builder to build a home without actually having that home under contract with a buyer. So I think that what we're going to see is builders are going to be waiting till that contract comes first before they build. And so, I think we're going to see a little bit of a slowdown in new construction, which is not going to help our housing shortage. So, future-wise, it's going to be a little tight.
Okay, so you're getting an opportunity now, but once rates come back, it's going to heat up again. So I think in summary, what we're saying is that, it's definitely it's a scary market for sure. But within this fear comes opportunity. If you're somebody who's listening to news who thinks that there's a huge value drop coming down, we're going to get homes for cheaper, you're not on board with that.
No.
Don't confuse price reductions for houses that are above what they should have been listed to begin with as an actual drop in value. You got to look at what it sells for today compared to a year ago.
Right.
That's real. That's when you talk about values dropping, but because of these things here, it's still a strong market.
It's interesting that you bring up. So it begs the question right now. There are some price reductions that we're seeing out there in the marketplace, but I think a lot of it has to do with sellers that have been living in the past. Their neighbor 2 months ago even sold for $600,000. Well, that was probably the very tippy top.
Right.
And to price your own home, that's maybe, let's say it's identical for the same price, I don't think that's totally realistic given the change in the interest rates.
Right.
So I personally, if it were me, I would be a little bit more conservative as a seller when I price a home. But we're seeing we're seeing a lot of sellers out there that are still shooting for the moon, living in the past, thinking that they can get bids over $100,000 over asking price.
Right.
It's just not realistic, right? Not in this market.
Okay. So before we go really quick, just what's your advice then if I'm a seller in today's market and I want to sell, or I'm a buyer in today's, and I'm going to do it. I'm going to go ahead. I'm going to sell. I'm going to buy. What piece of advice would you have for them?
I would say that if you need to sell, it's still an okay time to buy. You might need to get used to a little bit higher rate on the buying end, but it's not the end of the world, and it doesn't mean that maybe those rates go down in the future and you can refinance it. There's you're not totally tied to that rate. So
right.
I would say this could be the new norm.
Yeah.
It's okay. If you need to make that move, just go ahead and do it. Life is not going to stop, and real estate's going to keep going too. So you might as well just do it.
It's been in a long time. It always has. And you're right. You know what? Hey, either we're right and rates go down lower in the future, or we don't. And then that meant today, because again, we just don't see values dropping. Record equity, extreme shortage in inventory levels, which are going to be exacerbated with the sellers who aren't going to sell right now because their rates are, they don't want to step out of their 3% into a 7% because they don't have to, and builders cooling off. So we just think that this is going to, cause more of an issue. But once rates do drop or things come back, market heats up, and so there you go. So, well, I appreciate your time today. If you guys have any questions, please make sure to put those in the comment section down below. If you like this video, hit the thumbs up button. Be sure to share it with your friends and family. There's so much misinformation out there, so much doom and gloom in the market, and we just really don't think it's there. And so it's good for people to understand kind of really the numbers behind it and the finer details. So be sure to share it, subscribe if you want to know future content as well. All right. Thank you very much.
Thanks, guys.